This is Matt Aarons and Tony Moeller with Integrity Advisory. We want to take a quick moment and give you another market update given the continued volatility that we've seen in the stock market over the last week and a half.
The coronavirus is the 7th viral outbreak since 2003. But what's interesting about that is even though we're into the 7th outbreak, historically, since 2003, the global equity markets are up 400%. So as we can see, even though there have been past situations similar to this, the markets in the U.S. and overseas have powered through them over time.
I think as far as the stock market goes and where we go from here, right now everything that we're seeing is still short term. The biggest concern that we have with the coronavirus is still the disruption to the supply chain. So companies that are needing to get supplies out of China are not able to do that. Then they're not able to build products, and we're having a shortage of raw materials especially. We've already seen some large tech companies who are trying to migrate out of China and have production in other countries, but there's going to be some repercussions for that and still have some delay from a supply chain issue. So the coronavirus realistically was kind of just a catalyst to knock things off course with the bull market, which is certainly at risk here. We've had a pretty sizable drawdown so far in 2020. But we also want to remind you, there's always, as they say, there's always a bull market someplace. So while equities are down, fixed income or bonds have had a really good year. The Federal Reserve came out recently and had a surprise rate cut of 0.5%. That was not expected. It was actually fairly historical in that they did that in between meetings. So they had a special meeting just to do a rate cut. Previously, the market had been pricing in about 0.75% of rate cuts. Right now, it's pricing in 0.75% of rate cuts on top of the 0.5% that we just got as a surprise. So again, as a reminder, we've had these conversations before about fixed income. As rates go down, the value of those bonds go up. So the bonds in your portfolios are actually helping to give you a little bit of an uplift while equities are going down. And really, over the short term, we still expect to see some sort of a bounce out of this. The real question will be next quarter when companies are reporting earnings, what that looks like before we have a clear picture of whether there's going to be lasting impact due to the coronavirus or not. So in the meantime, we're keeping steady. If there's some cash that's available, then that's dry powder to invest and buy some things at a good discount here in the short term. But if you have any questions, certainly feel free to give us a call. We'd be happy to walk you through the strategy and our thoughts on the market. Thank you.
Thank you.